ECB
California
ECB
California
Altcoin
California
Altcoin
California
Altcoin
California
ECB
California
ECB.
Welcome back to PiWhales, your go-to channel for all things Pi Network and crypto. Today, we're diving into two key questions that every crypto enthusiast wants to know. How is the initial price of a cryptocurrency determined? And most importantly, what's mostly the price prediction for Pi Network when it finally hits open mainnet? The crypto world is filled with volatility, excitement, and opportunities, and understanding how prices are set can help you make informed decisions. Stick around to the end for a special breakdown of PiCoin's future. If you're ready, let's get started. So, how exactly is the initial price of any cryptocurrency determined? Is it random, or is there a structured method behind it? Like any asset, supply and demand play crucial roles in determining price. When a cryptocurrency first launches, its price is based on how many people want to buy it, demand, and how many coins are available, supply. The greater the demand and the lower the supply, the higher the price. However, this relationship isn't always straightforward, especially in the crypto world, where emotional factors like hype can play an outsized role. Take Bitcoin, for example. In 2010, Bitcoin's initial price was a fraction of a cent because hardly anyone knew about it. As demand grew, largely due to media attention and institutional adoption, its price skyrocketed. Today, Bitcoin's price is driven by a combination of limited supply, 21 million coins, and increased demand from both retail and institutional investors. Many new cryptocurrencies are first introduced through pre-sales or initial coin offerings, or ICO. During an ICO, early investors purchase coins at a set price before they are available on exchanges. These early prices can set the tone for the coin's initial trading price once it hits the market. Ethereum's ICO back in 2014 raised over $18 million, with early investors buying Ether for around $0.30 per token. Fast forward to today, and Ether has traded as high as $4,000. Early ICO investors enjoyed massive gains because they got in early at a low price point. Beyond the hard numbers of supply and demand, market sentiment plays an enormous role in price determination. In fact, some coins surge in price purely because of the hype around them. If a project generates excitement, especially on social media or within influential crypto circles, the price can shoot up when it first becomes tradable. One example is Dogecoin. Originally created as a joke, it skyrocketed due to hype, social media influence, and celebrity endorsements, like Elon Musk's tweets. The demand for Dogecoin far outstripped its initial supply, pushing the price to unexpected highs. Next, let's dive deeper into the economic and technical metrics that impact a cryptocurrency's initial price. These are essential to understanding why some cryptos shoot up while others stagnate. Utility is one of the biggest factors influencing a coin's initial price. A cryptocurrency with real-world use cases will typically launch with a higher valuation because people believe it will serve a purpose beyond just being a speculative asset. Coins that power ecosystems, such as those used for decentralized applications, or dApps, or smart contracts, often command higher initial prices. Look at Ethereum, which introduced the concept of smart contracts. This made Ethereum a vital part of the decentralized finance, or DeFi world, giving it immense utility. As a result, it quickly became the second largest cryptocurrency by market cap after Bitcoin. The balance between a coin's circulating supply, how many coins are available to the public, and its maximum supply, the total number that will ever exist, also influences price. Scarcity is key. If a coin has a small circulating supply compared to its max supply, or if the total supply is capped like Bitcoin's, this can lead to higher prices due to the perceived scarcity. Bitcoin has a maximum supply of 21 million coins. As of now, nearly 19 million have been mined, creating a sense of scarcity that drives up its price. In contrast, Dogecoin has no supply cap, and its price remains much lower because new coins are constantly being added. Cryptocurrencies are often mined, proof of work, or staked, proof of stake. Mining typically involves high energy costs and slower coin creation, while staking provides an incentive for users to hold onto their coins in exchange for rewards. These differences can affect the early price dynamics of a coin. Tokenomics refers to the design of a cryptocurrency's economic model. Key factors include the inflation rate, token burn mechanisms, and incentives for holding or spending the coin. Cryptos with deflationary models, where coins are regularly burned or removed from circulation, tend to have higher initial prices because of the reduced supply. Binance Coin, or BNB, regularly burns a portion of its supply, which has contributed to its rising price over time. This deflationary mechanism keeps supply limited, which supports price growth. Where a coin gets listed and how much liquidity it has are equally important in determining its price. Let's talk about how exchange listings and liquidity pools affect the initial price. Getting listed on top-tier exchanges like Binance, Coinbase, or Kraken significantly boosts the credibility of a cryptocurrency. When a coin is listed on a well-known exchange, it becomes accessible to millions of traders, which can immediately drive demand and increase liquidity. A higher trading volume stabilizes the price and can lead to price appreciation. Liquidity refers to how easily a coin can be bought or sold without significantly affecting its price. High liquidity means there are plenty of buyers and sellers, which keeps prices stable. Low liquidity, on the other hand, often leads to price spikes or drops because there aren't enough trades to absorb large orders. In decentralized finance, or DeFi, liquidity pools play a critical role in stabilizing prices. Now that we've covered how the initial price is determined, let's explore the different methods used to predict the future price of a cryptocurrency. Predicting a coin's price is a mix of art and science, so let's look at some strategies. One effective method for predicting a new cryptocurrency's price is to compare it to other similar projects at launch. Look at the market conditions, the use case, and the size of the community behind the project. This can give you a ballpark figure for what the coin might be worth when it launches. Pi Network has often been compared to early Bitcoin because it allows users to mine on their mobile devices. In the early days, Bitcoin was relatively unknown and mined easily by individuals. However, with a massive over 60 million pioneers, Pi Network has a larger starting community than Bitcoin had, which could mean a stronger initial price. One of the more analytical approaches is to use market capitalization as a way to predict price. The formula is simple. Circulating supply times price is equal to market cap. By estimating the potential market cap of a cryptocurrency, we can reverse engineer its price. Let's say Pi has a circulating supply of 100 billion coins at launch. If the market cap reaches $1 billion, the price per coin would be $0.01. If Pi's market cap were to grow to $10 billion, that would mean a price of $0.10 per Pi coin. Before Pi Network's open mainnet, analysts could look at data such as the number of active miners or pioneers, wallet creation rates, and any early decentralized apps, or dApps, or use cases to project potential price trends. Post-launch, traditional chart analysis techniques could be used to track price movement. Believe it or not, social media and news outlets are massive influencers on cryptocurrency prices, especially in the short term. Monitoring platforms like X, Reddit, and even YouTube can give you insights into market sentiment. Positive news or partnerships can send a coin's price skyrocketing, while bad press can crash it. All right, here we go. It's time to dig into the Pi Network coin and make an educated prediction about its potential price when the open mainnet launches. Remember, this is speculation, but let's base it on the key factors we've discussed so far. Pi Network has something that many cryptos dream of: an enormous active community. With over 60 million registered users and active miners, Pi Network is one of the largest crypto communities in existence. This community size is important because it creates inherent demand right out of the gate. Early users will likely want to trade, stake, or even hold their Pi coins, adding liquidity and demand. When a new coin has a strong, active community at launch, it tends to attract early buyers, driving up demand and, consequently, the price. For example, coins like Cardano, or ADA, and Polkadot, or DOT, had strong communities that helped their prices surge early on. While Pi Network has a large user base, not all coins will be available for circulation on day one. A portion of Pi coins may be locked up due to staking rewards, early mining incentives, and other mechanisms. If the circulating supply is initially low, it could create scarcity, driving the price up in the short term. Low circulating supply is a key reason why some coins experience price surges after launch. For instance, Binance Coin, or BNB, initially limited its supply through token burns and early lockups, which helped boost its price. The value of Pi coin will also depend on its ability to secure partnerships and real-world use cases. If Pi Network becomes widely accepted for payments, or if major platforms adopt Pi for various utilities, it could lead to a significant increase in demand. At the moment, the project is still growing its ecosystem, but the potential for Pi to be integrated into e-commerce or social platforms is a huge factor. The broader crypto market environment will play a huge role in Pi's price. If Pi launches during a bull market, the price could easily reach higher levels as investors are eager to jump on new projects. On the other hand, if the market is bearish, Pi could start with a lower price but potentially grow over time. So, based on all these factors, here are some of the price predictions for Pi Network at launch. Keep in mind that this is speculative, and prices in the crypto world can fluctuate rapidly. Low-end prediction. If Pi launches during a bearish market and with a large circulating supply, we expect Pi coin to start around $0.01 to $0.05. This would place Pi's market cap in the range of $1 to $5 billion if we assume there are 100 billion coins in circulation. Mid-range prediction. If the launch coincides with favorable market conditions and a manageable circulating supply, we think Pi coin could debut at around $0.1 to $0.5. That would give Pi Network a market cap of $10 to $50 billion, similar to early days of projects like Cardano or Solana. Now on high-end prediction, if Pi Network secures big partnerships, has a relatively low circulating supply at launch, and the market is in a bull run, we could see Pi coins start at $1 or more. In this scenario, Pi's market cap would likely exceed $100 billion, putting it in the top ranks of cryptocurrencies globally. Again, these are just educated guesses, But the key takeaway is that PiCoin has massive potential. How much it's worth at launch will depend on timing, demand, supply, and the utility the network creates. We've covered a lot today, from how initial cryptocurrency prices are determined to Pi Network's price prediction for the coming open mainnet. The price of any new coin is influenced by a wide range of factors: supply, demand, market sentiment, utility, and liquidity. And while predicting prices can be tough, we now have a clearer understanding of how it all works. Now, it's your turn. What do you think Pi Network's coin will be worth when it launches? Drop your predictions in the comments section below. I'd love to hear what you think. Don't forget to smash that like button, subscribe, and hit the notification bell so you never miss a PiWhales update. Thanks for watching, and I'll see you next time.
Subscribe to our PiWhales YouTube channel and earn Pi rewards.